Welcome back to another episode of the Profit Report. So let's go straight to the weekly performance. Okay, so for SPY, this week is up by 0.2%, while the Q is down by 0.22%. So it's very slow week. So if you look at the weekly chart, it looked like it went up during the first half of the week, and then it just cooled back down. So beginning to the end of the week, it's basically flat line. Okay, so let's see what the earning report was like. Okay, so first earning was Microsoft on January 28. It basically crashed. I think that crash was the biggest crash Microsoft ever experienced. So that was why the whole market would went up and then basically sell up right after the earning. And for Meta, it's the opposite of Microsoft. So it kind of pumped like 10%. So it kind of neutralized a lot of the loss that Microsoft experienced. And for Tesla and Apple, basically their stock are flatline for the week. Even though there was earning, there was barely any movement in their stock. So we have one crash, one pump, and two flat. That's why the whole market was kind of flat during this week. So let's see next week. What do we have for next week to see if it actually moved? So for the next week report, we have Google, which is the second biggest stock right now. So I think if it can run either side, it will make a big move on the market. And then Amazon, which is the biggest slacker on the last 5 years for big tech. But Amazon is a great company. That's why I own Amazon. So I'm hoping Amazon and Google do well to carry the market. And then I have AMD, which is not a big tech, but it's my second biggest stock. So I'm just gonna put it out there. So I'm hoping to see a great earning for those three companies. And we actually need it. So here's why. So have you heard of Bitcoin? So when people think of Bitcoin, they think of high risk, right? It's a risk on asset. And if you look at the 5-day or a weekly chart of the Bitcoin, just 5 days, it dropped 12%. So when a risk on asset is selling so drastically like that in a weekly time frame, it also means that other risk on asset will more likely to sell. So I'm thinking with this selling pressure on a risk on asset, stock like growth stock and technology stock will more likely to sell up on the following week. So actually, a lot of the growth stock already been selling. Like my biggest stock has been selling, so I'm down quite a lot from that growth stock crash. And for tech stock, we have um, Netflix, we have Microsoft. So if there's more selling pressure to technology stock, like let's just say Google have a bad earning or Amazon, there would be much more selling pressure in the tech stock. So we really hope that the earning from Google and Amazon will go up to kind of carry and neutralize this potential tech crash. Okay, so let's look at the paper account that I have. So what did I change from the last week? So on the TPR account, I reduced 5% on TQQ going to earning because there was some fear, there was some risk going to earning with 40%. So I reduced 5% just for safety. I posted in Facebook, but other than that, it remained like that the whole time. And the portfolio is very flat line, kind of like the market, which is that's what we trying to aim for. And for the premium account, I think I'm gonna decide to not do this account anymore because they have option feature that doesn't work properly with a paper tray account. So I'm thinking to replace the paper tray account for the premium account with a personal account. So let me show you what is that personal account like. Oop, okay. So this personal account is my personal Rod IOA account. So right now it's kind of messy, but here's the portfolio that I have. I have 10% on TQQQ, 45% on him, which is quite a lot on a single growth stock. But that's what the account is setting up. and kind of like the TPR account, got 8% on BRKU and 12 on Netflix, and I have 7.5% on AMD and 7% on Adobe, which is a secondary stock that I have, which I believe long term should do well. And I have a lot of small stuff on the side and cash. So this account is very similar to the paper account, where I have around 100K. Um, it also summarized my 3 year experience in the market. As you can see on the right picture, I start out at 24K, around 24K, and that's the first year of trading. And then if you look into 2023 performance, it's actually one of the biggest stock market growth in a single year. And because I didn't know better, the first year I actually lose money. I lose about 1/3 of my money because I instead of investing, I was trading, and a very bad trading strategy when I first started. But from there, I learned a lot of lesson, and I was able to grow. And up to now, I'm up 187% in 3 years, which is 100% more than the market. Even though I already have a decent crash here from 125 to 100. That's a big crash. So yeah, so so this is my 3 year experience with investing slash trading, and I will use this account moving forward for freemium after I clean up a bit. Okay, so here's the performance comparison for all the account. So similar to last week, the SPY barely changed, went up slightly from 1.36 to 1.76. So ideally it would go up, which is yes. So that's a check mark here. And then the Q went down to 1.45. So the Q currently does not beat the SPY. So is it on track for our goal, which is not good. Because the Q is not beating SPY, the base is more likely to not beat the SPY, which is shown here. So 1.69 compared to 1.76. And then due to the recent crash on my HIM stock, the TPR dropped quite a lot, dropped about almost 2% from a 3.5 to a 1.64. But as the account recovers, it should be able to beat the base account. And introducing my new account for the premium, start out at a negative 10.5%, which is a lot. This is due to almost 50% on the HIM stock. That's why I'm transitioning it closer to a TPR account and use option to optimize it, because a single stock that takes 30 to 40% of your portfolio is considered very extreme risk. And I think moving forward, I'm trying to lower that and convert that to more market performance. So that's why I plan to use this account moving forward for premium. And it looked like I'm starting out with a negative 10% compared to the rest of the market. So I have a lot of catch up to do. So at this moment, you can call me the non-profit rookie. So that is all for this week. I'll see you again on the next episode of the Profit Report.